3 reasons why Vladimir Putin's money machine broke down. 1. The structural transformation of the economy. The Russian economy was previously oriented to the West. It accepted private enterprise. In 2022, Russia invaded Ukraine. It has become a war economy that faces the East. This transformation has required a vast investment. Russia needed new supply chains. These chains would increase trade with China and India. Russia also needed to boost domestic production. By 2024, spending on fixed capital had increased by 23% from 2021. That adjustment now seems complete. Military spending follows a similar pattern. In 2025, it will grow by just 3.4% in real terms. This is down from the 53% increase in 2024. Less spending on this transformation means slower growth, but it frees up investment for productive uses. 2. Monetary policy. The Russian central bank targets 4% inflation, but inflation reached 10% in February 2025. Labor shortages are one key reason. Conscription and emigration reduced the workforce. Last year, wages rose by 18%. Companies had to raise prices as a result. In response, the central bank tightened monetary policy. It kept its benchmark interest rate at 21%. This is the highest level since the early 2000s. This strict approach may finally be working. High rates have attracted capital to the ruble. A stronger currency makes imports cheaper. Russians now expect lower inflation. Their expectations dropped from 14% to around 13%. Recent data shows inflation slowly decreasing, but fighting inflation slows economic growth. Russians are saving rather than spending. They're putting money into savings accounts. High rates also discourage business investment. 3. Low oil prices. A global trade war has hurt oil markets. Oil prices have plunged as a result. China's slowdown is particularly worrying. China is the largest buyer of Russian oil. The IMF reduced China's expected GDP growth from 4.6% to 4%. Falling oil prices have hit Russia's stock market. Oil companies make up a quarter of the market capitalization. The MOEX index has fallen 10% from its recent peak. Export revenues are declining. Lower oil prices directly harm Russia's economy. Government finances are already suffering. In March 2025, oil and gas tax revenue fell by 17%. The government is expecting a sharp slowdown in sales.